Hello, hello, hello. Welcome to Al Stock Trades. In this video, we're going to go ahead and respond to an important comment. And I want to use this as a form of education. Okay. So I'm not feeling well. I probably look pale. Um, I've been literally battling this huge cold, and I think I can muster up a couple of sentences. All right. So I want to respond to this particular comment here because I believe there's some growth that could come out of this. So it says here, I like you, Al. I like you too. You're a good guy. I'm shocked you have let yourself get so emotionally invested in such a poorly run company. So I went ahead and I first just forget my response here. Let's just focus on this. The first thing that came, as someone who's been, in this market for quite some time, analyzing companies, and they're doing their due diligence and intrinsic value and all these things. I always let's see here. I always ask myself, like, what does a poorly run company mean to this person, right? What is a poorly run company? If your only metric is based on the stock price, then yeah, down 63%. Oh wow. Totally poorly run, right? But how about PayPal? PayPal's down 53%. Does that make PayPal a horribly run company? Or how about Adobe, down 38%? Does that make Adobe a poorly run company? Or better yet, how about Tesla, down 51%? Does that make Tesla a poorly run company? You see, the the thing about poorly run companies is that there needs to be more than the stock price. But now let's continue on towards this discussion. Okay, so we just determined, because if we use the stock price as the determination of whether a company is poorly run or not, then of course, well, Tesla's poorly run, Adobe's poorly run, and PayPal's poorly run, right? But does that sound right to you? If it does, then um then I don't I think you should find something else to do, right? Because um that is wrong, right? But if that's what you think, then you're on the wrong space. Okay. So I said I encourage an academic discussion. Please educate me on how this is a poorly run company based off of the revenue, the net income. I'm really sick, so that was a typo. Okay, let's fix it live. Net income and future free cash flow from a year ago to now, a year ago in today's present value. Speech to text is terrible, especially when you're coming off of NyQuil. All right. He comments and states, and I believe this is him, Ammo. I am going to come back on your response. Okay, good. So this is the response. I'm not like hiding anything, So what are they going to stop the quarterly losses, and when will we see some evidence of this? Well, I argue with you, and I say, well, we can see evidence now. Here are the quarterly losses from Q1 of 2021 all the way up to Q1 of 2022 to Q2 and Q3 of 2022. And what do you see from this bar chart? Here's zero, and here's a bigger negative. What are we seeing closely as we go from left to right? We're seeing that this number is becoming less negative. Okay, so if we go ahead and go to the income state, well, let's just do this here. If you look at net income, let's just zoom in on here. If you look at Q1 to Q4 of 2021, you could see that we're in the negative 300 millions. I mean, if you look at the negativity in the numbers here, they're a lot more negative than if you were to compare them to the numbers here. AKA, they're becoming less negative, which is very clear if you look at, let's go ahead and remove revenues. If you go ahead and look at the net income schema here, you can see that they are slowly approaching profitability. So my argument to you is, Well, no, actually, I do see that. I do see evidence of them essentially decreasing their quarterly loss. Right now, here's another thing I want to talk about. Okay, last year and the year before, a lot of folks were advocates of the stock. Many people said, I love this stock. I love it. I love it. I love it. But if you look at it, the gross margins of the company was negative 12.9%. Negative. Now we're finally creeped up. This is called the trailing 12 months. Now we creeped up to a positive number. Again, I wanted higher, but it's a moving target. Net income. We went from negative 588 million to this year. We are going to become less negative than we did last year. And that trend will continue. Better yet, if you look at book value, we went from a negative 11, negative 5, negative 6 to a positive number. We are tracking along a book value that is positive. Likewise, if you look at working capital went from 7 all the way up now to $332 million. Again, increasing. Okay. Likewise, look at free cash flow. Negative 283 million, and now we're at negative 76 million. So it's very clear that this company is moving into the right direction. Okay. And we are in the early bits of it. And so this is the internals of the company. Now we can quantify of what they said. Well, they said, how many times did they mention profitability? They have to. They say it on a lot of times on purpose because they, they said it so many times, but yet we still, we have to continue talking about it, right? Which is fine. That's the point of Al Stock Trades, is to help retail investors thrive. It's just, it's evident, but it's fine. So what about their precious assurances of no capital? So there's another comment. Raising required and the dilution as a consequence. How can we feel a company is well run when they can't even be sincere with their shareholders? What do you mean about being sincere about when they're going to do a capital raising? They will do a capital raising when it is needed in the business, because CMS most likely requires them to have some cash on hand in order to sustain an insurance company. I mean, you're using the word feeling to analyze a company. And I mean, you're telling me that I'm getting emotional. This is a statement of endearment of the fight that they're doing that I originally talked about, which you can read here if you can pause the video. Okay. And it falls in line with their mission, which is what ACO and what a lot of these, government backed insurance companies, especially what the government's paying, that's what they're paying for, right? Okay. So, and let's see here. Yeah. So the person's obviously upset that they've lost thousands, I guess, of pounds of Europe. And there's talking about how it's a donation. That is so far from it, because if you look at investing, Tesla revolutionized the world. Okay. It's literally changed the world's impact on how we view cars. Okay. Now, if you go ahead and take a look at Amazon, okay, look at Amazon stock, okay, which, let's see, it's down 41%. Is it a terribly run company? Of course not, right? But what did you have a lot of folks like Jeff Bezos warning, okay? He recently just we could just read here. Amazon, and this happened November 14. It was published. This was 2 days ago. Amazon founder Jeff Bezos warns a recession is looming and Americans should prepare for the worst. So you're taking a macroeconomic context of the highest inflation rate that we've seen in the past 40 years plus, a Federal Reserve that's increasing interest rates at a higher rate than the Paul Volcker era, money being so expensive, the Federal Reserve adamant at trying to increase the unemployment rate. And it's very clear that stocks are all fallen. And, it's fine. I will continue making videos like this to give my insight of, how Tesla could be a, 51 down 51%, a terribly run company, Adobe terribly run, PayPal terribly run. No, of course it's not, right? So it's very clear. And this company just got a CFO, and they just started publicly trading 2 years ago. And the biggest the biggest answer, and I will conclude from this, and I got a little into the writing here, because again, I do mean this with the biggest heart intent. Why am I doing this? I'm sick and I'm making this video. If I didn't care, then right. So he responds, honestly, I never liked it. Okay, you never liked it. The investment, Clover, and he never liked Clover. Got caught by the squeeze when in a bad place in my life, and I have tried to average down since. So why did you average down if you didn't like it? If you don't understand the investment, why? Okay. My investment worth peanuts now, so no point selling. I pray you're right. That is an incorrect statement. You need to do your own due diligence. The purpose of Al Stock Trades, it's an educational platform. So you can go in and review the things that I cite. Like, for example, if you look at the title of this YouTube video, it's Investor versus Speculator, which is chapter 1 of The Intelligent Investor, which I highly recommend you read. Okay? So, hoping and praying that someone's right is not investing. This is not an investment. This is a gamble, which is what you did in the beginning, which is fine. But to average down in a company that you never believed in is, there's no logic to this, right? Don't call yourself an idiot. That's not, no. It's not that you're an idiot. That don't put yourself down. You think I knew this when I first started? I used to read an article that some a-hole posted on Yahoo Finance, and I would get scared that I'm going to lose my money. Please excuse my harshness for an old man's way of teaching. I'm very old school, so I teach, I believe our educational system has gone downhill because teachers have to be scared of what they say. Well, I'm not paid by any school administration. I say it how it is, and I give it to you. Okay, it may sound harsher because I'm sick, but this is Al Stock Trades that we created. It's an educational platform. Okay, and we can do, we're doing an analysis on the thinking. Why am I doing this? It's not because I'm trying to bully. No, this you are falling right into the psychology of the markets, which we will be teaching. You can know the most strongest investments of the world, and you could be the smartest man, but if you don't understand the psychology of the market, it is no good to you. You can have, a stock goes down, you freak out, it's gone, right? If this is not good, then everything that you do won't be good. It all starts here. Okay. But no, so I love each and every one of you guys, and if you can prove to me that this investment is wrong fundamentally, I would love to listen to it, because that is the argument that I want retail investors to get at. I don't want them to get shilled by the stories that, Jumia, Africa of Amazon. I want numbers, and I'm seeing good numbers. And if you can come to me, like, for example, Clover Access DC business completely, or not, they're decreasing it, right? That's something that's going to impact revenue, and we're going to talk about that. That's what I want to talk about. Okay. But we'll go into detail. I'm going to go take some Dayquil because I'm starting to feel a little dizzy. I don't know if you can see me at my face. I'm starting to feel a little dizzy. All right, guys. I got hit hard, man. I got hit hard. I love each and every one of you guys. I'll see you on the next one. Wow.